Good evening, active traders, and welcome to a really exciting session. I've been looking forward to this for months. How to trade winning breakouts and pivots. I'm Ken Calhoun from Trade Mastery, and joining me, my longtime of over 15 years now colleague, Steve Nison from CandleCharts.com. Steve, it's great to have you here tonight.
Great to be joining you as usual, Ken.
Yeah, we've got a really good session lined up for y'all. Just so you know, we're going to be doing something different this time. We're going to be going through live charts with some of the most spectacular charts in the entire industry. That we're going to go through together as a team and give you our take on how to combine the best of candlestick analysis with Western technical breakouts. So got a really good session lined up for you tonight. We're going to go through all these charts together. So hold on to your seat, get your seatbelt fastened, and we're going to get underway right now. As always, all information is for educational use only. We're not making advice about what to buy, sell, or hold, and by watching this screen to not make actual trades. I only had $1 for every 8,000 times I've said that. Anyway, thousands of traders. I love compliance. Worldwide trust Steve Nison and myself because together we team up to help traders, and it's our combined techniques we're really going to focus on tonight. It's many of you are followers of Steve, or you're followers of mine, or you're followers of both of us. What we're going to bring you tonight is a very special event designed to teach you some very specific patterns to combine the best of our patterns together as a team. So Steve Nison has been featured, and his clients have included everyone from the New York Stock Exchange to the World Bank to NASDAQ, world's top expert in candlestick analysis. Best P&L is 17. Important to learn candles from the right person. There's a lot of people talking about candles the wrong way. You want to learn from the one and only expert, which is Steve Nison. It drives me nuts. Sometimes I watch other educators' candlestick videos, and they completely muff their analyses. And like this guy said, if he hadn't gotten Steve's education, he could have lost a lot of money. So make sure you learn from Steve Nison for candles. You may be familiar with me. I'm a money show speaker for these 15 years now, since the dawn of time. Really honored to be voted 2 of the top 5 articles for the entire year from Stocks and Commodities Reader's Choice Awards. It just came out this last week. So I'm the only educator in the world who has 2 articles that break the top 5. And I think one of the reasons that they're popular is because they're based on real money trade examples and things that I've actually done in my own real trades. Here's a screen cap showing you proof that I did trade just under $5 million worth of trades in a single year. Here's my tax return 1099 from Interactive Brokers. So I'm the real deal. So Steve, and our goal is to get you guys to get how to understand to go bigger, better winning trades more often to join Steve and I. So without further ado, let's jump into those charts. First up to bat is Twilio. And Steve, maybe a quick note. I see actually 3 key candlestick technicals as well as a couple of Westerns, but there's a lot of interesting things going on in this chart. One thing that I will mention as a precursor is successful trading. I've traded millions of dollars worth of stocks and equities. You have to trade instruments with large trading ranges to make the math work out, to make it profitable. You don't want to, say, trade the same exact pattern on a chart that only has, say, a 1 or 2 point range. The risk-reward numbers are no good. So a quick tip, that an aha that might bite you if you don't know better, is make sure you've got at least a big multi-point, 10 or 15 point range is great. But Steve, any comments on this chart? Because it's a really good one.
A couple of things. One, and we'll look at another chart with a hammer, but if you look at the hammer, going back right over there, what's really important is not only it's a hammer, long lower shadow, small real body at the top end of the trading range, but what we always look for is a confirming candle signal with a Western signal. So it's nothing more basic than a horizontal support line. So we could see that hammer was confirming support anywhere between, I'd say, 23 and 24, the lows from late December. So that really gives you an indication of a high probability trade calling a low. And then I know one of your favorite trades, Ken, is a breakout. We have that rising window. And I know that's, one of your favorites. So it's great working with Ken, because Ken has his favorites. He talks about in our resource we'll be discussing later, and I have my favorites, which I'll be talking about throughout the session here, as well as the more detailed resource. So over to you, Ken.
Okay, great. And just wanted to check, let me put you on the spot, but is this or is this not a bearish engulfing? To me, that looks like it might be a bearish engulfing. Does that fit the criteria for a bearish engulfing?
It is, and one of the things, a little bit more advanced, but if we go back to, it looks like February 22nd. There's another bearish engulfing pattern over there.
Mm-hmm.
And one of the things that you could use candles for, many traders are not aware of, is a breakout. So the high of the bearish engulfing pattern in the prior two sessions is a potential resistance area. And for those who like to trade breakouts, you could wait for a close above that resistance area and think about going long, because that's a break of resistance.
Right, good point. So these are so many good charts, and one of the tricks to trading successfully is good risk management and knowing the signals when they're there. And so one thing I really enjoy about working with Steve the last 15 years is he does not only the technicals, but what that means, even more importantly, in terms of deploying into trading actions and what's the trade management entry signals. And he covers that in our stock trading success system in great detail and very good advanced training as well. Now here's another good one, ETSY. And I notice we see a hammer here and another hammer here, and then a gap continuation or window continuation here. Anything, Steve, from the voice of the candles on this, other than the hammer? I guess that's probably the most important.
Right, most back-to-back hammers, and I'll tell you, even if these were not ideal hammers, if the the real bodies were a little bigger, we could even use single lower shadows to show an area where demand is coming in, because at some point during these sessions, and we should keep in mind that these strategies that Ken and I talk about work on a daily chart, an intraday chart, a weekly chart. It doesn't matter what time frame you're looking at. So the long lower shadow is showing you at some point the market got down to, in that case, around 16 and a half, or even a few sessions later, maybe 17. And for whatever reason, demand came in to keep the market off the lows. In other words, the buying came in to keep the sellers in check. And let's go back, just show the importance of candles in context. And obviously, we won't have time to go into all the nuances that could make you a successful trader, keep you from avoiding misuse of candles, because there's a lot of free information out there on the internet. But boy, oh boy, if you use the free information, you are going to get burned. So, for example, if we look at January 12th, the hammer over there, keep on going to the left, right over there. Now, for those who understand, that go to the internet, they say, hey, a hammer is a candle with a long lower shadow like this, and I'm going to be buying on that hammer. Well, it's a hammer, but look what we had right before it, a falling window. So that window is resistance. So if you're buying on that hammer, you're buying at a resistance area. And look what happened after. You would have bought there around 20 and a half before the market fell $4. What is that, a 25% loss by misusing the hammer? So with our education, not only are you going to learn how to correctly recognize the candlestick signals, but more important, when to take a signal as a buy or a sell. This would not be a buying signal, although it's a hammer, because as I mentioned, you're buying right at resistance. It's not a great strategy.
Right. That's a good point. There's so much, I know you guys probably all watch YouTube if you like all the hundreds of people who respond to my survey, but there's danger in 10-minute soundbite YouTube video clips, and it's not in-depth enough to teach you what to look for. Now, one pattern that I will mention too that I like is a confirming. I always like to position size or scale in. So if I get in above the hammer high there, another good technical reversal pattern is, and you may have seen this in my stocks and commodities articles, if it traverses all three major moving averages or comes back to life. And here we have a large green momentum candle above the 50 simple moving average. So that's a first reversal candle. Here's a confirming breakout candle that's north of all three uncrossed moving averages. And then here's a fourth signal, or I should say a third signal with the gap continuation that took out new highs. Now in our next chart, before we look at more of these 90-day charts, I know some of you are day traders. I am a day and a swing trader. Is anyone else trading BXC? I'm curious, because it also illustrates what Steve just mentioned, because he's so brilliant. I have learned so much. I did so well with my trades thanks to Steve. If you see bullish lower shadows or bearish upper shadows, whether it's a tweezer that leads to a pullback or large bearish upper shadow, bearish upper shadow, bearish upper shadow, you don't have to see a shooting star or bearish engulfing. Just the presence of a tweezer or a large counter trend shadow can tell you it's about to drop. So if you got in, say, somewhere north of 20 and out near 28, that's an 8-point run, or even up to 30, which is a even larger run. But the bearish upper shadow portends a reversal. But this is a good example for day traders. My favorite chart of the week, because of the range. This guy is on high volume, and the range is so critical. It's from 17 to 37. So dangerous for new traders, but for experienced traders, look at the profit potential in that kind of chart. And when you combine classic gap continuations, like this is one I covered for my live room members, you had a gap and a bullish cup continuation, it can really provide spectacular returns if you're on the right side of the trade, and then use the bearish shadows to exit the trade on a loss of the candle bottom low. So let's see. Let's move on though. We've got plenty to work on. Here's our next one, VEEV. Now this one, Steve, correct me if I'm wrong, but from what I remember, you said something about the upper shadow should be 10% or so of the whole real body. So this may be not 100% fit, but it's still, like you said, as a bullish lower shadow. So, or is this just a plain hammer and it's good to go the way it is?
Well, we could view it as a variation in a hammer, but what's important with this, if we draw a horizontal line, let's say from the lows of January, that little bullish engulfing pattern, and even a little before that, but we don't have to draw it before that, but you can see there was a support area. And one of the Western strategies I like using is a crack and snap. So a market cracks under support, as it did with the black real body, the red real body, sorry, and then the next session or the session after cracks, snaps back above it. And what's nice about that is you have a great risk reward. While candles don't give targets, there's a lot of Western technical strategies I use. Again, we don't have time to get into all of them. And this is one of them with a crack and snap. If you buy as soon as it gets back above that broken support line, your stop is under the low of the, in this case, the hammer-like line, and the target is the most recent high, which was up at 63. And you can see how the market got there.
Right, perfect analysis. So, and one thing to combine that with the voice of the West is, even if you miss, the first reversal, you can always look for breakout above moving average breakout crossover or following a gap. And often one of my favorite patterns to look for is a large whole real body candle. The largest candle on the 90-day chart is kind of the belle of the ball. She's the sweetheart. It tells you got high institutional volume coming in. This guy had 5 million shares coming in on February 28th, and it ran from 70 to 78. Now let me give you another quick rider downer. And these are all really good, valuable tips. And we're going to have to go quickly because we've got a lot to cover. But sell nines. I published an article last year in Stocks and Commodities on that. Nines is a really good example of combining a very professional price action resistance strategy with candles. So for example, I don't know offhand if that's a bearish engulfing. I know that's not, but I don't know if that qualifies as bearish engulfing. But I would be out here, or actually be out at 75 if it dropped to that whole number support. But the point is, nines are usually resistance areas, and those are exit targets. I've trained so many thousands of my students over the years. A good strategy, a 10-point price action strategy that you can combine with candles, is to buy slightly above a value of 10, a multiple of 10, like somewhere north of 60 would have worked out fine as another good example. But if you want to get in early, you buy, say, the 61 or 2, sell the 69. Rebuy the 71 or 2, sell the 78, 79. As it gets within these 10-point windows, that's another good professional trader strategy. One of my institutional clients, a market maker who came to one of my Vegas seminars, clued me in on that. And that's a really good, valuable strategy for swing trading. Is never, the Rider Downer, the Reader's Digest version, is never buy anything with a 9. That's a good selling resistance. You can always buy over 80 if it breaks over that. So that's something else. And Steve, let me ask you, I guess, a quick question about the height of candles. Like the bulls are in charge. That's my favorite pattern from a momentum trading standpoint for breakouts, is larger than normal green candles on high volume. It tells me institutional traders are coming in to accumulate shares, and it makes for a really good risk reward to buy somewhere north of the candle high, because it's a good breakout signal, because all these buyers dried up available shares. They, like a sponge that soaks up water, they bought into it, and it led to a new explosive breakout.
Right. And so there, with the small real body showing a little bit of hesitation, but once, like you said, with that breakout, it's a great time to buy. And this is where Ken's the real expert. He knows how to, trade breakouts and use long white candles or long black real bodies to really take advantage of big moves just as they're starting, or jumping on, when they're continuing, but getting in early enough to really be able to, suck more profit out of it. Because a lot of times, in this case, it might be you might think it's a little overextended, but based on Ken's knowledge, no, look what happened. When I look at that first tall white candle, I might say the market's overbought, but the way Ken uses it with his years of experience, he says that might be a great time to buy. With all the little secret strategies that he has.
Yeah, and we cover all that in our stock trading success system and the webinars that you guys will get once you order for the next year and a half without any subscription fees. So that's something we'll talk about a little bit later. But things like that, don't buy nines, wait until over the decade value is a very valuable technique. I've tested that out with thousands of trades. Even one of the world's most famous traders tested out. I won't mention his name, but I got a note from him saying that he back tested that and it did work out more often than not. And you'd instantly recognize his name. He's one of the world's top technical guys. So anyway, that rule of 9 is a good one. Sell the nines. You want to buy it wholesale, kind of right over the decade value, and sell retail to the retail traders with the 9. Now here's another chart, Micron. Now this one has a more clearly defined maybe hammer. And I switched over to black background charts as a good tip from Paul, who said it's good to give you guys some visual variety, right? So we're not all with white background charts. But anyway, so Steve, looking at this kind of confirms the moving average support down here with this hammer low, right? And then from there, we're off to the races from 42 to 62, a 20-point run if you traded the candle pattern correctly.
Exactly. And what's nice about a lot of these candle patterns, you could use them as protective stops. So if you bought on that hammer, you just keep a stop under the low of the hammer.
Right. And there's so many good charts out there to look at. Now this also illustrates a pattern that I teach a lot called, and you'll learn more about this in the members webinars for stock trading success, is what I call an acceleration ramp. And that's where it's a straight price action pattern where you've got a steady uptrend. And there's no magical indicator out there that does this for you. You just got to eyeball the chart. But if you do have a steady uptrend that then gets these large green momentum candles right here, and then matures into a 45-degree angle classic Western breakout, you're good to go. And I'd be fine selling right now, right? I personally, if I were long Micron, I'd be selling it. Today would be fine, or tomorrow, and then rebuying new highs if it breaks north of 64. But that's an acceleration ramp. It's kind of like a steady uptrending channel, preferably after a hammer or bullish engulfing. It breaks overall moving averages, continues to attract new buyers, and a cherry on top is large green candles on the right side of the breakout, and then it continues to spectacularly run another 10 points for you. That's the type of strategy that I want to cover for you, that we cover together in the stock trading success system, and that's something that I thought we'd cover for you tonight. We've got a few more to go through, and then we'll tell you a little bit more about how to continue your education with us. Here's one, Fate. That's a dire warning, I guess. I wouldn't have picked the ticker Fate, but anyway, it is your destiny. Follow your destiny. Anyway, this is a Fate. We've got another, I don't know if this is quite a hammer, but it looks like it could be a hammer, and that would be a low. And then it ran on up. Steve, any tips on this one?
Yeah, with that one, I would maybe not view that as a hammer, but nonetheless, it was confirming a support area. The only problem with this one is we notice this falling window before the before the hammer.
Right.
So to really get going on this, we'd have to see a close above the falling window, which happened about right over there. So that to me would be a breakout trade.
Right above here.
Yeah, right.
Let me ask too. That's a good question because I'm curious. Does this qualify as a downtrend, or is it only for like a classic downtrend is something, or better if it's something that's been in a nice plummeting downtrend, and then does a hammer and pivots? Is that then not enough to qualify as a downtrend because we got a loss of? Okay, it's only a couple of days, so maybe that makes.
But it's a big loss. Yeah, right. Yeah, it's not always the number of sessions, but it's how much of a drop, and that was a pretty big drop. Yes, I would view that as a downtrend. Mm-hmm.
Okay, that's good to know. Let me give y'all another two patterns here from a momentum trader standpoint. One that again, I like large green candles at the right side of bullish cups, and a bullish cup looks like the letter U. But another pattern that's embedded here that I'll give you as another takeaway is a sequence of two candles in a row. You've got a small whole row body followed by a large momentum whole row body on increasing volume. And if it breaks previous resistance, that's likely to attract new buyers, which this guy did. So this is FATE, and it's a really good chart. A good example of a momentum runner that's starting to fade back down. Here's another one, 3D. Who can name this pattern? Steve, what's this pattern?
Oh, I don't know.
All the traders in the house.
Okay.
Say yay. What is this one?
But I would also ask, beside that pattern, what else makes that an attractive buying opportunity? I made reference to a chart similar to this, discussing the importance of having the candles confirming something else.
Right, right. And in this
And
case, it looks like the bullish engulfing low is kind of confirming the
exactly.
prior low. And
Right.
that's an important check that I often forget myself, but it's always important to look to the left and see what's going on, in terms of previous support or resistance. The only thing that I don't like about this chart would be what? I do like the fact that it has a bullish engulfing clearly explained, but what I don't like is the low range, which is why I'm not a huge fan of $5 and $10 stocks, because with few exceptions, it's really hard to get tradable ranges out of those compared to stocks in my favorite wheelhouse, which is $20 to $40 a share. That's my specialty, is $20 to $40 a share stock. Sometimes we go a little higher, sometimes a little lower, but I like charts with enough point range to make it worth my time as a trader. So from a bullish long signal, yeah, it confirms it, but from a range standpoint, it doesn't quite have enough range to blow my hair back. So here's another more exciting chart, BOFI. Steve, anything going on in this from a candlestick standpoint that would be worth noting?
Not so much a candle perspective, but if we look at the resistance right around 39.50, starting, looks like the last day of January, with that long upper shadow. Well, January, sorry, all the way back to January. So you see the long upper shadow, January 31st. There we go, and just extend it horizontally. See, once the market broke above that resistance area, we have the change of polarity. World resistance becomes support. So if you do buy in the breakout, which is a nice breakout trade, you set a stop under 38.50. And pretty much it was a box range. You don't have to draw it, but between 33 and 38.50. So it had $5 to 38.50 and get a target to 43.50. We're almost there already. But once again, this idea of not only using the candles, but using breakouts from a resistance area. So for example, if we look back, it looks like the February 21st is a shooting star. If you go a little bit to your right, February 21st, I'm sorry. And there's a shooting star there. And so once it breaks above that resistance area, because the higher the shooting star should be resistance, and that shooting star is confirming resistance area, once it breaks above there, that's a breakout trade.
Right, perfect. And a good point from Steve on box trading ranges. It's a brilliant strategy. You may want to be sure to read the classic book called How I Made $2 Million in the Stock Market, which is basically box trading ranges in the 1950s and how the guy made $2 million in the stock market trading with box ranges. From a trader standpoint, what that tells us, and I like to price project like Steve does, you got a 5-point range here yielding a 5-point target of 43.50. That means you may get into a false breakout region if you buy a simple new high. And for all of you who are scared of breakout trading, you should be, because there's an art and science to trading breakouts professionally. I've traded millions of dollars worth of breakout trades. And my first maybe 4 or 5 years, mostly unsuccessfully because I got into false breakouts. So I specialized in the subsequent 15 years to learn how to avoid false breakouts. And using price projected trading ranges is a good way to do that. So knowing that say 43.50 is going to be resistance, it'd be not a good trade to buy a classic breakout over say 43 because there's no upside and it's likely to stall and do a false breakout. How many of you, show of hands, have ever, and let me do a quick poll here too, an audience interaction poll. What type of trader are you? Are you a swing trader, a day trader, or both? Let's hear audience presentation. And thanks to Paul again for a great idea for that. Such a smart guy. Anyway, so it's the first time I've ever done a poll and GoToWebinar, so forgive me if I didn't get it right. But how many of you guys and ladies are swing traders? How many are day traders? How many do both? We're currently at 41% swing, 16% day, and 45% both. So looks like almost half of you do both. That's interesting intel. Copy that. We got 45% of you do both, 40% swing, and 14% day. Okay, let me go ahead and close this off so we can get back to the charts. But thanks, it's good to know a lot of you do dabble in both. And so one of the things that you want to avoid as a trader is false breakouts. So understanding ahead of time, that's where I use candles most often, is to exit trades. I use candles mostly as an exit strategy. I'm a breakout trader to enter, But if I see, say a shooting star or price projected resistance area or bearish engulfing, or the candles are getting melted and going flat and turning into dojis after large green candle sequence, I'm going to tighten up my trailing stop, lock in a profit, and go on to the next trade. So, like Steve said, good teamwork. Using box trading ranges to avoid false breakouts is another good strategy. Let's see, any comments on this one, Steve, and PBR? Anything jump out? I like the
Yes,
window.
the window, right. And one of the things, if you could draw a line at the bottom of the window, right from the bottom of the window, one of the things that viewers and listeners should be aware of, the market got under the window, but as long as the window holds in a close, as it did here, it's still a support area. So the market really would have to close, in this case, under, it looks like about 1220 or so. So once it got under the window and got back above it, one great strategy is you could think about buying it. And this way, you're only risking, if it closes under, let's say, 12, you're risking just a few cents. And your upside target would be the most recent high before that, multi-tested resistance right around 14. It's a really nice risk reward.
Right. And it's good numbers. So the neat thing about what Steve and I teach you in our stock trading success system is that you can, as he mentioned, apply these towards different price instruments and different time intervals. So if you're an intraday trader or a swing trader, if you trade $40 or $50 stocks or $10 or $15 stocks, there's something here for everybody. And really pleased to be able to share with you things that get so much good response from the traders. Here's another one, SQ Square. It's been one of my favorite Bitcoin sympathy stocks. It's been quite a gangbuster stock if you look at a longer term chart. 6 months, 6 months ago it was a $26 stock. Now it went shwang. That's a good technical term. Shwang, upwards and onwards, up and away like Superman scaling a building with a single launch, single jump. Anyway, the 3 month on Square. Anything interesting here from a candle standpoint? I see the cup pattern breakouts tend to hold and explosively run on up to new highs, so that's good. But anything else from a candle standpoint?
Well, what I do is we see a doji right around March 6th, I think. But once again, let's look at the candles in context. So normally a doji with the opening and closing on the same tells us the market's tired. But if we draw a horizontal line from the highs of January 26th straight across to the right, so go to the high there. I'm sorry, January 31st, I think it is, the high over there, and just draw a horizontal line. And you can see, again, the change of polarity. The change of polarity, when you have a resistance or support area, has to be tested at least twice, so obviously it was. So that old resistance becomes support. So yes, the doji is telling you the market's tired, but here again, the importance of the correct education, and we're only touching on a little bit of it here. If you sell in that doji, you're selling right at a support area. So I'd rather be selling. And what we mean by selling doesn't always mean going short. It means locking in profits. So if you're doing it, if you're selling it right there, you're selling at support. And look at, you would have missed a $7 rally. So once again, it's not only understanding how the candle lines are drawn. You can get basic candle line construction anywhere on the internet. But where you really get what you pay for is with the correct education. And just that, just this one example is what the correct education means to you. I mean, yeah, you would go on the internet, see a doji as a reversal signal, you sell it there. And in this case, you go short only to be down $7 within a couple of days. So, you're paying for the education.
Yeah, and that's a good point. This is a pattern. Let's see, a comment from John. Actually, I originated the concept of a large green candle at the right side of a congestion or a bullish cup. Other people have since copied that, but that's something that I'm known for the last 17, 18 years. One thing that you'll notice often following a large green candle is a resting day. So if we kind of zoom in on the 15-day swing trading chart, you'll see often after a large green candle day, you'll see a mean reversion pullback. That's that doji right here. Kind of zoom in on a 15-day, 15-minute candlestick chart. And does everybody see the 50% retracement? You may have seen my articles in Stocks and Commodities on mean reversions. That's another strategy that I teach in the members webinars for stock trading success. We have a breakout that ran this big. It pulled back to the midpoint, which is a mean reversion or 50% pullback, and then we're off to the races. So oftentimes you'll see a large green candle day that then does a small kind of melted candle or doji or flat or resting day. Just like Steve had said in an earlier webinar, oftentimes after a big run, it's kind of healthy for it to digest its gains and to rest. And often you see that after a big window or a gap or a large multi-ATR day where the average true range is a multiple of the previous days, which this was on the 5th, you'll often see a pullback to the midpoint and then it skyrockets on up. So that is one pivot that I do trade often, is because I know it works, the mean reversion pivot. And you'll learn about how to trade that in the members events for the stock trading success system once you order. And we're almost wrapped up with our charts. We're going to tell you more about that. And we've got a couple of bonuses for you later too. But a few last charts here. Seagate, the hard drive manufacturer. The window ran, and as Steve teaches, it held support, so that's great. Even if you missed, so the point is, even if you missed the window that ran up, and you can see what's that, a gravestone? Is that a gravestone doji? And then it pulls.
What's that? Yep.
I'm trying to learn
It's,
after all these.
Gravestone doji, represents the bulls who died defending their territory. Yep.
Okay, it's a good sad analogy from the land of the rising sun. Is always like the abandoned baby and all those other ones. And then we got to drop here to support, which, like Steve teaches, as previous support. So even if you missed the gap that ran up, it came back down to support and gave you a second chance at it, right? And this guy ran all the way from 48 to 60. So that's a 12-point run, 13-point run. Steve, any comments on this chart? I like the range and how clean the chart is, how well defined it is.
Yeah, like you said, the window, the whole window is support, and the beginning of the window is the support area. So if you buy at the beginning of the window, you must be comfortable risking down to the bottom of the window. So in this case, we'd be buying around 46, risking maybe it's around 44, so risking 4. Upside potential would be 57. So nice risk reward. I always look for at least a 1 to 2 risk reward.
Right. And it's off to the races we go. Another quick tip, a good rider downer, is look at, say, the last 5 or 10. There's no magic number, but look at the most recent candles. And like old school cars, if you've ever seen comedians in cars getting coffee, you could see a lot of great old classic cars. There's a carburetor, which is one of those things that younger people may not be familiar with, but for those of us who've been around a while, air fuel mixture. And I used to work at Ford Motor Company as a statistician and quality engineer, so that's where I got my numbers background and training. But the point is, the ratio of fuel to air, the ratio of large green candles to the ratio of red candles is decidedly bullish, though bearish lately, so I wouldn't be going long right now or anything, but it did have a nice run up. And the ratio of green to red candles, I don't know, Steve, any thoughts on that? But I like to favor charts that are mostly bulls in charge lately for longs, right? Where you've got, 4 to 1 or whatever, some large, where it doesn't look like Christmas trees where it's green and red and they don't know what the heck they want to do on the way up. I like to see charts that have a sustained run of multiple green charts or green candle days with a minimum of red. So does that make sense?
Yep. And it seems like, what's nice about the candles is everybody has their own little expertise, with how they use the candles based on the time frame they're trading. They'll take our information, but there'll be little nuances like you picked up, based on your years of experience, which you relay in our education. So that's a great point about the relationship between the green and the red candles.
Yeah, it's all these, the candles are wonderful. I could not imagine trading with bars. It'd be like watching black and white TV, which unless you're watching a classic Western or something, which is I go to pass, that's cool. But if you're trying to trade for money, you need candles. Why trade with bars? It's like watching black and white versus color TV. So, it gives you so much more information visually, the story. And if you watch a lot of movies and TV shows, you got a story arc. So here's the last two. Last but not least, we've got APTI. And Steve, take it away. What do we got going on in this one?
Let's see. Nothing, well, importance of risk reward. So here we have the long lower shadow candle, looks like on February 6th. Not a hammer, but the long lower shadow shows us the bulls rejecting lower levels. We're at a support area, but can we do anything with this? Would we be buying on this? And the answer is no. Why? Because we're right at a resistance area. So in this case, what we could do is wait for a retracement. And one of the things I will do with the long lower shadow is wait for a retracement anywhere between 50% and the bottom of the lower shadow to think about buying it and keep a stop under the lower shadow. This way, you're farther away or further away from the resistance area. You're closer to the stop out area, so you have less of a risk. And what that does is give you a better risk reward because you've decreased your risk in relation to what you're looking for on the upside.
Right. And Voice of the West has to chime in with the fact that we are at a 50 simple moving average support line. So it kind of confirms. And in fact, if you geek out with the statistics, that's how it is calculated in part to the data points that form this lower shadow. But the point is the 50 SMA provided visual support for price action there. So that, in addition to this, makes it a good risk reward trade, like Steve mentioned, very small risk and good upside potential with at least a 3-to-1 risk reward. You're risking maybe a dollar at most, and you've got a 3-point target, 27.50 from 24. So yeah, you got a 3-to-1 risk reward, and it even broke on out to new highs and did even more from there. So that's a good chart. And our last chart we've got is CNK. And if you guys have any questions, feel free to ask. Let's see. Question from Mike is: Gate is at an acceleration ramp? Yeah, lately it is. You're correct. From not so much 2.9 to 2.28. That's the start of an acceleration ramp. The tail end, and I just call it this because it looks kind of like a hockey stick or a check mark. That would be how I would draw the acceleration ramp. I don't have any software that does that magically for you. The best software is in your head. And so, but yeah, that is an acceleration ramp. You're exactly right. This would be the first leg of an acceleration ramp, and that's the confirmation. And we still don't want to buy here because that's a decidedly bearish candle. So I would wait until, a good rule of thumb, by the way, folks, is 50 cents above the nearest whole number high. So although not a trade recommendation, I would be waiting till 62.50 before buying because I want to avoid a false breakout. So good point. You're exactly right. Thanks, trader. Smart comment. And last but not least, we've got CNK. What I like about it is the range. It's pulled back off its earlier highs, but the range on this guy is 34 to 44. So it's got 10 points range on a $40 stock, which is great. That's a 20% trading range, and that's good for risk reward. But Steve, anything jump out from the voice of the candles on this one?
Yeah, classic. We saw this before, and you pointed out the gravestone doji at 44.5.
Yeah.
Right over there. Tells us time to take profits on the longs. And show you one of my favorites is if we go back to very quickly February 12th, and it looks like the 9th and 12th. A little hard to see there, but there's a rising window. If we go to the right a little bit. Right there, tiny. I like small windows because it gives you a very tight support area. And the reason this trade is so good from the upside on a breakout, look at what was prior resistance at 38. So we have the change of polarity and a rising window. So two strong reasons for support. Look what happened in the next session. Got right into that support area and off to the races. So you would have been risking 50 cents, and I probably would have been taking profit either on the shooting start 40.5 or at 44.5 in the gravestone doji. So like an 8-to-1 risk reward.
Yeah, spectacular. And that's something that's it's good to hear. We have that in common. We both favor, I didn't know the first time I heard that, but it's we both favor small windows or small gaps are always the best gaps. You don't want big, huge 20-30% gaps. Small gaps rule the roost. So this guy, I mean, from a point standpoint, it's a big gap, and not from a percentage standpoint. This is visually a small gap. This is an even nicer small gap that led to new buyers. What you would not want, say, for example, is that this guy, this is BXC. What a chart, too. How much money could you have made? Did you guys, like, you could have freaking thrown darts at this guy, and, I won't say you doubled your money exactly, but it did go from 17 to 37. So just saying, being on the right side of the charts to trade. And that's something you'll get as members of Stock Trading Success is every other month we meet and we go through some of the strongest charts, and you can bring your own charts. And I answer Q&A for you guys, too, as part of the ongoing coaching. It's included with no subscription. So that's something else that's a good benefit for you guys. But anyway, small windows are really good. So with that, hopefully we've given you some insights in terms of some good value-added content of how to combine the best of the East and the West and the types of patterns that you can learn from. So that brings us to the long-awaited promotional message. And don't tune out because we have some bonuses at the end. So one thing we wanted to mention is that we do have the Stock Trading Success System available for the next week and a half until March 25th for you. And, we can't say it better. It's kind of like it's bragging if you say it yourself, but it's proof if other people say it for you. And editor Jayanthe from Stocks and Commodities, who has seen hundreds of trading systems. She said by the time you're all done with all dozen DVDs in this trading system, you'll certainly gained enough knowledge to trade for a living. And that's something that, that's why I put it at the top of the page, because we teach you how to trade in stock trading success. And instead of DVDs, now it's a downloadable course because nobody looks at shiny silver disc much anymore. So we get it. And so now you can get the entire course as a downloadable video course with many hours of training, and the trader testimonials kind of tell you who it's best for, so that, a lot of times traders are concerned, will it help me? Is it too advanced? Is it too basic? Is it something I can actually get? And you can see a lot of these traders initially had the same questions. Then we have over 100 comments from traders who with it. So that's what has sold hundreds of systems for us, is the world's traders, and the world's top editor for trading magazine said, it's worth getting, and the price is under $1,000. This is, if anything, this is a course that should be one of those $2,000 or $3,000 courses like you've seen elsewhere, but we come in at just $795 on this, so it's a really good value. But Steve, any, I guess, quick thoughts on the benefits of the stock trading success system? It's been helping hundreds of traders, and over 99% of people who bought it have been thrilled with it. We've got so many testimonials and comments, and really, we'll tell you a little bit more about what's included, but I just want to get you guys a little bit excited about the authenticity and the integrity of the training. It's the best stock trading system out there that I know of. No other system has all these 100+ testimonials and reviews from the trading industry and all the rest of it. But Steve, any thoughts on this?
Yeah, I mean, think about what Ken and I were on for 30 minutes, and think about what's on this with 17 hours of videos. And don't let the 17 hours scare you. Ken will show you, or you could see it on the site here. Everything is bite size. So if you're interested in breakouts, you can easily find the section on breakouts. You don't have to worry about, as Ken mentioned, no more silver disc. You just go there immediately. We have some great topics like the hot seat. And Ken, you can describe that in a little detail. It's one of my favorite parts of the seminar. Live market analysis, and on and on. And as I mentioned before, and I think it's really important to repeat, get a lot of free information on the internet, but you get what you pay for. And I think we've shown you just a few examples of where you could see a candle signal or a Western signal, but the trick is know when to pull the trigger and when not to. Recognizing the candles and other signals may be relatively easy. I mean, there's a lot of nuances to also correctly recognizing candlestick signals, but more important to your pocketbook is what to do with it.
Yeah, that's very well said. Yeah. Anybody can recognize the pattern, but put it in context. What's your risk reward? How to combine, what you learned from Steve with what you learned from me, with combining the best of the and the patterns is something that's been a really good value to traders. And one thing you guys will get, because this was recorded a few years ago, you get, by the way, we're doing 2 for 1. You're getting 2 whole seminars worth of videos. They're downloadable videos that you can get, WMV videos that you can download to an external USB hard drive or whatnot and keep it forever. So you don't have to stream it and log in every time. It's all downloadable. And to keep it current, I'm very conscientious. I give you guys 1.5 years plus. Oftentimes I let people stay around a couple of years, which is fine, I don't mind. But every other month, every 60 days, we get together in our mastermind coaching events, and those are with me, not with Steve, but just with me, and I go over a new topic of the session. And so how to combine pivots and breakouts for strong entries, advanced breakouts, looking at swing trading charts. We look at things like ADX, how to avoid false breakouts. Here's the calendar for the balance of this year. Once you order your system, you get access to bi-monthly webinars for an entire 1.5 years, and that's very valuable because it keeps it all current. So one of the objections might be, well, you recorded this a few years ago, is it still valid for today's markets? The answer is yes, but it helps to have examples. Am I right? So that's something that I like to provide. And also, you guys can bring your charts to these events and ask me questions, and I'm very giving of my time. They're an hour long, and I stay around at least half an hour after. We get so many questions often, you can bring questions and get answers, and there's no subscription. It's all included. So let me show you what you guys get in the bonus vault. Steve's going to graciously do a bonus webinar private roundtable. Steve, you want to tell them about what they'll get with that once they order?
Sure. We're going to ask for any market, U.S. market of your choice. And what I'll do is a real-time analysis. and it'll be, after at nighttime, so you'll be able to attend. But for those who can't, we're going to make a recording out of it. So we'll ask you which market you want me to look at. You can either watch it live by special invitation on the webcast, or as I just mentioned, we'll make a recording, and the recording will be sent to you. But you could use the strategies I'll show you for your market to set up a trade the very next trading session.
Right, and you're also including the Nison Trading Principles hour-long video too, and
exactly, and that you'll get right away as soon as you order. Right.
Great.
That's streaming, huh?
And one thing I'm also including is a recording of kind of a fast action. If you've ever, like, I just bought a big screen Samsung TV, and they're wonderful, the big 4K TVs, and they look sharp as a razor. And I don't like reading instruction manuals, so I like a fast, a quick start guide, which you may have got. This is a video quick start guide that's included for how to use the course. It's so we don't just, leave you hanging with, here's a course, go study it. This gives you step-by-step a blueprint for how to take action, how to plan your trades, how to benefit from the videos and the webinars that you're getting, and how to use it as a part of a complete trading system. So that's downloadable video that's included. Another bonus that we just started offering a couple of months ago for the first time, we used to sell these separately for years and years, and many traders bought them separately, and they paid, $1,500 plus for both systems. You guys are getting both for the price of one. And this is our Trader Secrets first system we ever created from our Sheraton Anaheim event we did, which was, we originally called it the Samurai Seminar, and we had a group of, it was like 20 people, 25 people showed up for that, and it was a 7 DVD system. It's now in downloadable format, and that's included free. We sold that for years at $7.95. Hundreds of people were thrilled with this, and so that's something where Steve and I did our first ever live seminar, captured for you guys on video, included free. So you get both Stock Trading Success and the Trader Secret system. We used to sell it separately on its own site, but to give you guys even more value, that's a full 13 hours of bonus videos plus PDFs of the entire presentation decks and charts that we had. So you get charts for both systems so that you can follow along and take notes and that kind of thing. So that's cool. What else? I offer swing scans. If you're already a swing scans member, you can substitute one of my other alert services, and it's non-recurring. It's 2 months of weekly swing trading webinars that I do every Saturday live with my top 10 picks and specific price entries to test out. And that's a 2-month access pass that starts April 10th and ends June 10th. So that's 2 months of swing scans. That's my best-selling alert service. So you're getting that too. So anyway, it's only $7.95, which it should be up at $12.95 or $14.95. That's what our marketing guy says. He said, you're undervaluing it by offering it for so cheap, but we'd rather reach more traders than make a fortune with this. So let's see, Steve, let me ask, can you make some comments about the trader testimonials? Because I think that sells this more than anything. There's more testimonials for this particular uniquely valuable system than any other trading system I've seen in the entire world. There's over 100 testimonials, including rare video testimonials of people saying how much they liked the seminar when we filmed it live at the seminar. But, if nothing else, the most important part of this page is you folks talking and telling us how it helped you. And that's, why the testimonial section is so valuable. It's unique in the entire trading industry. And I think it's something that really helps you get off the fence and say, hey, this should be something I should own. And at the price, you can't go wrong. It's just $7.95. It's not a $14.95 or $29.95 master class like it should be. It's only down at $7. It's under $1,000 now. So we used to charge $12.75. Now it's only $7.95. Then we started charging $9.75 when it first came out for proof, and hundreds of people found it valuable at that. Here's a stocks and commodities article review. When it came out, it was $9.75. It's now just $7.95, and you get 2 systems in downloadable video format instead of just one. But I think the testimonials are really a testament to Steve Nison and to myself and all the traders who really learned and benefited so much from the course.
Right. I don't know if you were asking. Yeah. So anyway, about the testimonials, one of the things, unfortunately, because of new regulations, not so new, a couple of years ago, we couldn't put the dollar amount that they made. But most of these, we're talking about how much they made and how much they avoid losing. So these testimonials, actually, as impressive as they are, were much more impressive when we had dollar figures in there.
Yeah, that's a new FTC compliance rules. You can't say performance-based testimonials of how many thousands of dollars, even though a lot of people still do that. I'm 100% compliant, so we don't have the numbers of how much they all say they made. But the point is, they're thrilled with the videos, and they really learned a lot. So you can see, and by the way, a lot of you say that you do like video previews. So, and I agree. It's kind of like going to Costco and you get a sample of something before you buy the whole box. You guys can watch streaming video previews here of all 12 DVDs as well. So we got just a couple of more notes here before we wrap up. Let's do something lighter side, because I can't stand just watching PowerPoint slides or charts or the PowerPoint slides or things. If you've ever seen the comedians in cars getting coffee, our goal is for each of you, our sincere goal in stock trading success is to help all of you become traders in markets making money. And the punchline is you can still get all the coffee you want and take a car to get there as well. So, but the point is we want you guys to be traders in markets making money. And the only way to get there is to get expert knowledge. And I think one of the things that Steve and I are really sincere about is helping you get there sooner rather than later. So, order by Sunday. I've got a special bonus coming up in just a minute. Watch this. This will get all you guys to order. It's a really good bonus that I've never offered before, at least not in quite a few years. The swing scans, the round table, Nison trading principles. You get over 42 hours. And like Steve said, I don't know about y'all, but I don't like watching hour after hour of stuff. So most of the training is in 15 or 20-minute bite-sized pieces, which was edited. I edited that carefully personally. So back on the DVDs, that were different chapters. Now that it's downloadable videos, they're video clips that last from 15 to 20 minutes each. So you can instantly click on the topic that you want once you download the videos and watch it. So you get over 42 hours of training. That's like a whole week worth of training for just $7.95. The total value, if we were to add all this stuff up, the retail price of what it used to be at is $29.60, and it's only $7.95 when you order now. So Steve and I have helped thousands of active traders worldwide as a team. It's your turn to order this. I can't say it any better than this. You'll certainly have gained enough knowledge to trade for a living. Very grateful to Janthi for writing such a kind review, and it was a good idea to let everybody know about that. So here is the fast action bonus. I've not offered this before. To make it even better, kind of like the cherry on the top is I will give you a full 30-minute private phone call with me if you order fast action by this Sunday. So place your order. I normally charge $1,000 for hour-long institutional client calls. So half hour, that works out to $500, and you guys are getting a full 30-minute, just you and me, at a time that we mutually conveniently schedule. Any time between summertime, June, and the end of the year. So want you to have a chance to look through the videos, test out some of the techniques, start getting some wins under your belt, some lessons learned, and then we can talk on the phone and I can answer your questions. So you get a full 30-minute private phone coaching call with me if you order by this Sunday, March 18th. Or if you're a procrastinator, I'll still give you some time, just half as much. You get a 15-minute call if you hold off and order between March 19th and 25th. So either way, I've got you covered, but I do sincerely want to help you guys learn how to do this the right way. So I want to give you a month or two to study some of the training, and then you and I can schedule a phone call personally for a full half hour, and you can ask me about individual charts or trading strategies or anything that I can do to help out, and that's included. So that's a fast action bonus that's not on the website, at least not yet, but you do get a half hour with me on the phone at a mutually convenient time sometime between June and December. So register your spot now at Stock Trading Success. We'd love to have you join our hundreds of other satisfied system owners. It's a great deal. We know, you and I both know, this should be like a $19.97 or $24.95, up near a couple grand price product, but it's only $7.95 because we want to reach as many traders as possible. And there's no upsells in the course. It's not like you buy this course and then there's but if you want the super duper course, it's only $5,000 and order now and it's only $4,000. We don't do that. We're very honest and authentic, and we give you, soup to nuts, the kitchen sink, everything you need for professional stock trading exclusively at Stock Trading Success. So thank you all for being here. And Steve, thanks for being here. Any parting thoughts for our traders? I'm really proud, and I mean, just a personal note, I'm really pleased to have been working with you for 15 years. It seems, doesn't seem like just yesterday, but I don't know if it doesn't seem like 15 years either. But it was a real thrill to do both of those live seminars with you. And Steve and I no longer do live seminars because nobody wants to fly out and see people in live seminars. And the older we get, the less energy we have to stand all day long anyway. So you capture the best of us live seminars. You get two-day seminars. That's 4 days of content or 40 hours of training with Steve Nison and myself on both of our live seminars in downloadable video format exclusively at stocktradingsuccess.com. So hurry up and order now. Operators are standing by. Now it's your turn. But Steve, any thoughts on this?
No, except that, well, I shouldn't say no, but yeah, the idea is that there's a lot of information here. I just want to emphasize that it's very bite-sized, and even if you don't use all the strategies now, they're going to be in your video library for you to use forever and ever. So, depending on, if you're trading strategies, maybe you're looking at daily charts now and you want to focus a little bit more on a 5-minute chart, or you want to look a little bit more about trade management. It's there waiting for you, but all the information you could start applying right away in your next trading session to not only, and it's important, a lot of traders don't realize it's not only getting into those trades early with the good risk rewards and the probability on your side, but risk management, knowing what not to do, because at the end of the day, it's not only how much you make at the end of the day, it's how much you didn't lose, because it's all added together.
Right. And, again, the very conscientious way to continue your education is, number one, there's no subscription fees, but you get the year-and-a-half subscription of every other month coaching webinars with me personally every 60 days to extend your knowledge. And we go over live charts using the techniques illustrated in Stock Trading Success to keep it active and alive for you for a whole year and a half. It's a very good, I don't know anyone else in the industry that does that much work for their traders, but I work my butt off for you guys, and I really sincerely want you to make it. And I really appreciate, everybody ordering. We have so many hundreds of people who've ordered the system over the years and found value with it. We hope that you'll consider it as well. So let's see. Let's wrap up a couple of questions. A question from Drew: will PDF outlines be included with the download? Yes, we do have PDFs included with all of them. A question about John about would I buy Micron on a pullback? No, I don't like pullbacks unless it's a full 50% retracement. Let's see. When buying on a green candle as an upper shadow, do I buy above the high of the high or the close above the high of the shadow? Because that's a bearish. If it's a shooting star, that's a bearish cup pattern. So I wait instead to get above the high of the shadow, because only above resistance is it likely to attract. It flips kind of algorithmic trading. If you folks are familiar with high frequency trading and dark pools and algorithmic trading, the Boolean operators use OHLC data, open, high, low, close data. So that's why I like to trade breakouts at new highs, because that, with the false breakout filter, so you don't get screwed by a false breakout, is likely to attract new buyers after you get in. See, the trick is not buying new highs. It's buying new highs at a magnetic price point that's likely to attract a rush of new buyers after you get in that you can then sell to. And that's the whole trick of breakout trading. And you'll learn how for the next year and a half in the members webinars that are included with Stock Trading Success. So very conscientious about follow-up training for a year and a half, right? That's a long time. And you guys get to ask questions and get answers from me. And we've got all these extra bonuses to sweeten the pot too. So you get to work with Steve and his roundtable, get the Nison trading principles, get a quick start guide, get the whole entire Trader Secret seminar captured on video, downloads. This is all download only. It's not, so we don't ship DVDs. I painstakingly converted all the DVDs to downloadable WMV format videos. So that way you can download and keep them on a hard drive and watch them by just clicking it, anytime you want. So, and swing scans too. So do order now. It's waiting for you, and it's just $7.95 for the download. If you want the physical version, we can ship it to you at twice the price, but I would go with the download because it's only $7.95, and that's or 42 hours of training. So anyway, thank you so much. We're at an end for tonight's event. Thanks for all the smart questions. I do appreciate it. And thanks. The trader had asked about Renko. No, we don't do that. This is all about exactly what we taught you tonight. but much more depth. So anyway, thanks so much for being here, and thanks Steve Nissen. It's always a pleasure to do these with you. We've been doing these for quite a while and reaching hundreds of the world's traders. Folks, this will be up on my YouTube channel later, so you will get a replay link via GoToWebinar's email that points you there. But basically, it'll be on my YouTube channel, but it'll be embedded at the top of the Stock Trading Success page. So for the replay of tonight's event, just bookmark the page stocktradingsuccess.com, and I'll try and get it up here for you guys within the next couple hours. So it'll be there at the top of the site by tomorrow morning at the latest, but I'm working on getting it up there tonight. So you'll be able to replay it to your heart's content, and I will have a download version link as well. So you guys have been amazing. Thanks so much for the smart questions, and thanks Steve Nissen for working with me for Stock Trading Success. It's something genuinely to be proud of. We have so many hundreds of traders that have ordered and loved the system. Wanted to reach as many folks as possible with an irresistible 2-for-1 offer at under $1,000 price point, so it's affordable, it's integrity, it's, you know, it makes sense, it's well thought out, and traders love it. So we hope that you'll love it too. Thanks so much for being here, and thanks Steve Nissen for joining me tonight.
My pleasure. Thanks, Ken.
All right, good night everybody. Best wishes, and remember, until next time, you know, trade smart. Trade with small share size, use position sizing, combine like Steve teaches in his Nissen triad, the candles, the Western technicals, and trade management, and let's go get them. So order now exclusively at www.stocktradingsuccess.com.